So two questions here. Is the timing right to take profits? And does this mean you should stay away from stocks for the moment? To the floor show and our traders, Dan Greenhouse, of course, hedge fund manager here, and Dutch Masters. Dan, let me get right to the Goldman call and where you see the markets, because, yes, we have seen quite the dramatic run-up. So what are you expecting with the S&P 500 in the next couple of, I guess you could say, weeks to months?
Yeah, I think it's perfectly fair and reasonable to assume that the market has a bit of a pullback. And that's not just an opinion, if you will. That's you can look at some of the internals of the market, some of the technical indicators. They're in overbought territory. And so it's perfectly reasonable to expect some digestion of this rally. But that's obviously separate from, let's call it the medium term, whether or not you think stocks are going higher. But yeah, I think some level of hesitancy right here is correct.
Okay, hesitancy, but does that mean, Dutch, that you just stay away from stocks, or do you double down on digging for the little chunk of gold that is still there? Hard to find now, though.
Well, thanks, Liz. Speaking of digging, yeah, so the Bitcoin miners are actually coming back here. There's been some development in the Bitcoin world, but I think, Dan's absolutely right. We are extended a little bit in a lot of the indexes, mostly, like you said, 37% rise in the NASDAQ and the Techland stocks. So we're looking outside of Techland. We like things in the beauty, like ELF, the beauty space. We like Amphastar Pharmaceuticals, AMPH, but we really went large into the Bitcoin mining space this morning because the SEC has made a cataclysmic decision, we think, that hasn't yet priced into these stocks, and that is that there are going to be winners and losers in crypto land, and one of the winners is Bitcoin.
Okay, but Hut, let's just be clarified here. 70% of your portfolio is now committed to one stock. And this is, I think it's important to point out, it's based in Canada. Basically, they bridge high-performance computing with digital asset world. But they're not just Bitcoin. I was looking into this. They're commercial, financial, healthcare, government, gaming, blockchain, et cetera.
Right. Right. Well, we like the action. From a trading standpoint, we really try to find stocks that trade what we call righteously, stocks that are not, really noisy and irrational. We're looking for some rational trading, and the market makers in this stock seem to be pretty rational players. And so, we will take a huge position, like 60 or 70%, and then by the end of the day or the end of the week, if we've reached our target, which in this case is about $3 a share, we'll start peeling it back and reallocating. Okay,
so piling in. And by the way, for those of you who don't know, Carnivore Trading's portfolio is up more than 90%, about 95% year to date. So he knows from what he speaks, but more of a trading standpoint. Dan, where do you like these markets now? And obviously you have somewhat of a different perspective here.
Yeah, I mean, we've taken a look at some names in the Bitcoin space, and I think there's certainly some investments to be made there, not necessarily in Bitcoin themselves, but in ancillary businesses, if you will. But I think from our standpoint, I think there's a lot still to like in the energy space. This is not necessarily a derivative on oil. You're investing in companies for the cash flow, for the shareholder return profiles, and so a lot of them remain attractive even at lower oil prices. And then I think on the consumer discretionary side of things, the sector's done extremely well this year. A lot of that on the back of Amazon and Tesla. But there are a number of parts of the economy that are holding up on the backs of what the consumer are doing. Things like the home builders, obviously, one of the best industries you can invest in. A lot of leisure and travel, like the hotels, if you will. There's a lot of different investments you can look at on the back of the strong consumer that have done well, and I would argue are likely to continue doing well as long as the job market holds up.
As long as the job market holds up. There's been a little bit of retrenchment there, Dan, but barely. We still look at it very strongly. Tomorrow, Fed Chair Jay Powell is speaking. What are you expecting here, and do you brace for something like that?
Yeah, I mean, I think it's hard to know what he's going to do tomorrow. Obviously, we just had the Fed meeting, so it's fair to argue that he's not going to deviate too much from what they just said. But I think at this point, the street in general seems pretty divided on whether there's any more rate hikes to come. My own personal inclination is I think it's pretty safe to say there'll be one more. Whether there's a second one after that remains to be seen, but all of that is secondary to the average investor when it comes to how long the rates will stay at these elevated levels. Whether they hike one or two more times, you should care less about than when they are going to probably start bringing them down, and that's more likely than not a story for next year.
One thing you care deeply about, Dutch, is selling and taking profits. You've just sold two names to take some profits. What are they and why?
Well, we sold Workday because it is in the tech space, and we also sold Snowflake. But we were really doing that to kind of make room for these other calls in the other sectors. I completely agree with Dan. There's a lot of opportunity out there outside of technology stocks, which are the most extended positions. And I'm right down the middle with exactly what Dan's having to say about interest rates as well.
Yeah, well, I'll tell you something. When Jay Powell speaks before the House tomorrow and then the Senate on Thursday, what's important to point out is that the Q&A sometimes force him to, deviate. So we'll be watching for all of that and more.
That's right.
Dan, Dutch, great to have you both. Thank you so much. Look at the Dow.